Short-term rally in commodity stocks. But, Dr. Bob, I want you to weigh in, again, on a stock market metric. Knowing these guys, in the pits, the institutional investors, if the House vote fails this evening, if it fails to support the bailout, what happens?
It's a big negative for the market.
Risks.
It is a risk. But I'm willing to take the short-term negative risk the stock market gives me tomorrow and next week and next month for the long-term gain. This bailout is the absolute positive wrong thing to do for our stock market.
We're really talking about the future of America here. And we're really talking about the future of free market capitalism.
We can't do it.
I wonder out loud, I'll let you all take a whack at this before we lose this segment. You're going to come back. America is demoralized economically right now. People read about these bailouts. You see the opinion polls are very much against them. America is demoralized, and that may explain the lack of risk-taking, the lack of animal spirits.
Absolutely.
And the government thinks it's doing good, but the government may be doing bad, because I've never seen a period in American history when government spending and bailing out. Bailing out is not the road to prosperity. My friend Amity Shlaes wrote this great book on why FDR was wrong during the Depression, why Herbert Hoover was wrong. Isn't that so? I don't hear anybody on Wall Street talking in those terms. It's high time they did.
They have to. It's creative destruction. That's what we need. The industry doesn't work. We never even talked about they have too many makes, too many motors, too many assembly lines. That's why they don't make any money.
Larry,
we have to stop that.
Whenever the government interferes with the free market and they create problems, it's always the market that gets the blame, and they rewrite history. Hoover created the Depression by interfering in the market. Roosevelt made it worse. We got out of the Depression despite the New Deal, not because of the New Deal. Yeah. And they're in the process of creating another Great Depression, but with a lot of inflation.
We're going to take a break. Y'all are going to come back. We can talk more about this if you care to. I want to get into the strategy here because commodity stocks are rising, and there is an inflation-deflation debate. Now, coming up, the Congress, of course, is taking aim at TARP. Some very unhappy congressional campers are blasting the Treasury today. Another attack. CNBC's Hampton Pearson is going to give us the details. I will tell you this, folks. I'm sick of Bailout Nation, and I want to TARP the TARP. I do not want another $350 billion to go to every business in America that's having a little bit of a problem. This is America. This is capitalism. Let us rear up on our hind legs and get back to first principles. We'll be right back. All right, we're back with Bob Froelich, Don Luskin, Peter Schiff, and Steve Forbes going to join us. Ms. Pelosi is still selling the bailout bill. Dr. Bob Froelich, what's your investment strategy right now? Have we, in fact, seen a bottom, which is still a live question? After today's trading, the Dow is up 16% from November 20th, the S&P up 20%. Bottom?
I think we've seen that bottom, and what I want to be is we want to be positioned in the U.S. stock market. I think it's going to have a good turnaround in 2009. It has a nice bounce off the low, but what I really like is a couple things happening for 2009. First, Larry, our central bank was the first to recognize the global slowdown. We've got about a year head start on the other central banks trying to play catch-up. I think our economy recovers first, which to me means our stock market recovers first. I see $4 trillion sitting in money market accounts looking for something to invest with interest rates as low as they are. I think they got to come into the market. Then I got another $3.5–4 trillion in sovereign wealth funds.
Favorite sector?
Ours, financial services.
Financial services.
It's been beaten to death. It's been absolutely destroyed to death.
Bounced off the bottom very nicely. Don Luskin, take a look at today's trading. Energy and commodities up 4 or 5%. Metals and mining up 9.5%. Is there a commodity play going on here?
I think there is. In fact, I think the best investment strategy right now is just to look at everything that did the worst in the catastrophe that ended on November 20th and just do that. Just rank order them. Pick the worst. Financials, the second worst. Materials. You know the roll of honor. Pick the ones that did the worst and buy them. Because whether this is merely a bear market rally or the beginning of a new bull market, it doesn't matter. We can make that decision in a couple weeks or a couple months. But we're definitely coming back for the reinvigoration of the willingness to put a little confidence in stocks and take a little risk. They just got too cheap, and the ones that got the cheapest are going to perform the best.
Peter Schiff, your thought?
Well, look, I've been telling people to avoid financials for years. I don't care if they bounce. I wouldn't touch them. But a lot of us, what else Don is saying, I like. We talked a little bit about inflation earlier. The government is financing all the stimuluses, all the bailouts with inflation. No one is talking about trillion-dollar tax increases to fund all this new government. It's all going to be funded with inflation. They're going to create money. And once this dollar rally, this phony rally runs out of steam, the dollar is going to fall through the floor. So you want to own everything that's real. You want to get into real assets. You want to own precious metals. You want to own energy. You want to own the base metals. And you want to invest abroad. I mean, looking around the world, there are stocks trading at 2 and 3 and 4 times earnings right now, paying 10, 20, 30% dividends.
Steve Forbes, you hear Peter Schiff. You buy this, the dollar's going to sink some more, and it's time to jump back into gold?
Oh, well, I think gold, as you know, Larry, is the best indicator of what future inflation is. It's moved up a little bit. But in terms of the dollar, I want to see what this new administration does in having a stable dollar. Democrats and Republicans have done it in the past. Bush did not do it. If they do that, that'll go a long ways to getting this economy back on track.
They may take a hard dollar policy.
They might.
All right. Work. We're going to leave it there. Bob Froelich, Don Luskin, Peter Schiff, Steve Forbes. Thanks for everybody. We're coming right back. Much more ahead this evening. CNBC Reports continues.